Good morning, you're watching Business World Live. I'm Danie Laurel. It's 10 a.m. this Wednesday morning here in Metro Manila. We are about 30 minutes into this trading day. Let's go straight to our top story. PEZA-approved investments in the first 7 months dropped nearly 30% as companies take more cautionary actions amid the pandemic. Approved investments fell to 52 billion pesos. That's 27% lower compared to the same period of last year. You can see on your screens here, PEZA-approved local investments slid the most. That's down 63%. Foreign direct investments likewise saw a decline. Meanwhile, sectors that retained optimism among its investors include manufacturing and BPOs. Both sectors saw higher approved investments compared to the same period of last year. PEZA says it remains hopeful despite the lower approved investments this year. The agency now expects total approved investments for the year to shrink from last year's 117 billion pesos, which was already lower than the figure the year before. Palace spokesman Harry Roque has said that extending the strict lockdown placed on Metro Manila and nearby provinces would be unlikely, and President Duterte himself said that the country has run out of resources to maintain further lockdowns. Economic managers have also placed their bets. The modified ECQ in NCR and the surrounding provinces will end on August 18th. Check out my Bloomberg terminal with me. We are opening on the uptrend. Take a look at that. 5971.28 is where our index is at. That is up by 0.3%. That extends the rally that we've seen since the start of the week. Recall that yesterday we were already up by 0.4%. As President Duterte hinted that easing of a lockdown, and this rally was, according to Chris Mangon, brought about by that exactly. Let me take a look at that. Okay. Darren Pangan of Timson Securities also mentioned that the PSEi had risen as investors look forward to the upcoming meeting of top trade officials between the U.S. and China, set to happen after this weekend. In an interview with Xinhua News Agency, China's central bank governor said the country will uphold its commitment to the U.S. for the Phase 1 trade deal, despite the tarnished relationship of the two countries, of course, relating to the coronavirus pandemic. Value turnover on Tuesday stood at 5 billion pesos. Foreign investors remained net sellers, but those outflows were actually trimmed to 377 million pesos. So Chris Mangon saying that the general sentiment remains cautious as investors await monetary or fiscal policy adjustment from the central bank in next week's meeting. You can take a quick peek here at which stocks are moving today. Let's just take a quick check. I'm just going to be very quickly checking with my producers here, because it seems that the internet is a bit choppy. Whether or not we're actually going to continue the broadcast, we might be pausing for a quick break here before we return to the markets. watching Business World Live. I'm Danie Laurel. Apologies for what happened earlier. There seems to be network connectivity problems across the metro with this weather. Nevertheless, it is 10:18 in the morning, so we started trading at 9:30. We're closing in on an hour into the trading day. Now, take a look at my Bloomberg terminal here. I just wanted to highlight how we are on the uptrend in terms of our local bourse. We're actually up by 2.2% the past 3 days, so since Monday's trade. And this amid President Duterte hinting, and even Harry Roque, as we said in our headlines earlier on, that a longer, stricter lockdown is unlikely. They will likely ease it after August 18. And this is what Chris Mangon of AAA Equities has said has been buoying the markets. Another thing that Darren Pangan of Timson Securities is saying is that it's also the optimism coming with the fact that the U.S. will be meeting China trade officials. That is set to happen this weekend. Investors looking forward to that. In an interview with Xinhua, China's central bank governor had said that the country will actually uphold the commitment to the Phase 1 trade deal with the U.S. despite all of these souring relationships between the two big countries. Nevertheless, value turnover is still very slim in our local bourse. Chris Mangan saying that the general sentiment is still very cautious. Now, one sector to be watching out for here are the banks, and I want to bring that out for you guys. The banks have been granting more loans to MSMEs. This is according to the Banco Central. And big companies as well to help them cope with the ongoing crisis. Now, citing preliminary data, the Banco Central had actually said 97 banks have disbursed loans to MSMEs, driving up the reserve ratio requirement balance from the MSME loans to around 84.2 billion pesos. That's actually more than 7 times the daily average balance. So much more loans that are going out from the banks. And this, of course, comes amid the triple R cuts that the central bank has approved throughout this year. MSMEs, of course, make up around 99.5% of all the business establishments in the country. They now have that liquidity. You can actually see the financial sector jumping on my terminal here, up by 0.9%, led by RCBC, 6.2%. That is actually slated to release its earnings right about now. So we'll be checking in on that later on. LTG Group, however, was the big star player of yesterday, and I just want to pull out that and other Lucio Tan stocks, and this as they release their earnings. Take a look at LTG first of all, trading at 8 pesos and 8 centavos. That's up by close to 5%, up by 9% in just 3 days of trading. And you're going to be seeing on your screens here the earnings that they just released. Second quarter net income down by 21% to 3.81 billion pesos. That's on the back of revenues also easing by 6% to 22 billion pesos. But if you take a look at the first half net income, it's still in the green. So net income up by 9% to 10 billion pesos on the back of revenues up by 4%. So what they actually said is that it was not really just the sales, but higher finance costs from loans that ate into their bottom line. The finance costs were higher by 64%. So the interest that they had to be paying on their loans, but they did actually have better operating results from tobacco, spirits, and property segments, and that outpaced the drop in banking and beverage. You can see the segments here and how they've measured up. Get this, tobacco up by 40% in the first half of the year. And this amid the lockdowns, right? So nevertheless, people still buying up tobacco, up by 40% to 8.22 billion pesos. Tanduay, however, is also up by 43%, so 543 million pesos. What's very interesting is that Tanduay said that the improvement is due to better margins in the liquor segment and a 41% decline in selling and marketing expenses. So recall that there has been a liquor ban ongoing, on and off during this quarantine period. And still, because of the decline in selling and marketing, they've actually managed to post a hefty increase there in their bottom line. Eton as well has been up by 9%. They said that they've had higher rental income from the expansion of the leasing portfolio. But Asia Brewery, that of course has lower end beverages like water, mineral water, and also beers. And that actually dropped by 84% due to the effect of the quarantine to sari-sari stores and also supermarkets. And finally, you've got PNB, their Crown Bank, that is down by 64% to 1.44 billion pesos. Let's take a quick peek at the PNB earnings. That was hit by loan provisions. You can see on your screens here the provisions for the credit losses hit 8.4 billion pesos in the first half of the year. So that's around 5.1 billion pesos just in the second quarter. And that has dragged down the net income by 97.5% to 53.6 million pesos. The first half net income also down by 65% to 1.4 billion. And also the return on equity, so what the investors actually get for every peso they've invested in PNB, is now down to 1.81% compared to above 6% that they had been receiving for their investments here. The coverage ratio as well, not coverage ratio, but just the non-performing loans have also increased in the first half of the year. Another one I want to be looking at, though, moving on from the LTG group, but still speaking about liquor, is Emperador. We've been looking at Emperador basically because it is about to replace Semirara as one of the listed index stocks here. And that had actually surged as Semirara was also plunging due to that shuffle. Now they've announced that they will be bringing local brandy brand to the rest of Latin America. This according to their CEO, Andrew Tan. They've actually got a Mexican subsidiary called Casa Pedro Domecq, and that has 57% of the brandy market share in Mexico. That cites data by marketing firm Nielsen. So this is actually Philippine brandy that is being sold in Mexico, and they have a strong foothold there. They would like to expand to other countries by 2021. This brandy business is about 70% of most of their revenues. Recall that they also have Scotch whiskey, they've got Mackay and White, they've also got Fundador, which is also based in Spain. That had actually gained already yesterday, but is now seen to be paring back those gains. Emperador down by 1.1%. Now let's bring in actually later on quickly in the broadcast with me to discuss all of these things. We've actually got Philstocks Japhet Tantiangco to join me this morning.
Hello, Danny. Thank you for having me.
Hi, Japhet. So it's so good to see you. Now, there's so many things going on in the markets, despite all of the health issues as well. There's still a lot of active stocks here to be watching out for. Now, I just want to take a very quick step back, because markets seem to be breathing a temporary sigh of relief here after 5 straight weeks in the red. Tell us, what is the sentiment right now? You've got 5 straight weeks in the red, record daily new cases of the virus, a reimposed lockdown, but that might be lifted na, a GDP slump, worse than expected. It can't get any worse. Is this going to be the week where you should be positioning na?
You can. There are select sectors that we can choose from. The defensive sectors, we can go there. Primarily the consumer retail, as well as the telecommunication sectors and even the utility sectors. These are the ones which we think are resilient, strong enough to withstand the current situation in the economy. But if you're going to look at the market in general, we're still seeing a bearish bias. For this week, yes, we are posting gains, but it's under low value turnover. Trading is still tepid with our average value turnover for the week so far at just 5 billion. This a little less than 5 billion, which is below the year-to-date average of more than 6 billion. So this means that there are still a lot of investors that are staying on the sidelines, waiting for the clouds to dissipate. And given at the same time, there's still a lot of uncertainties moving. As mentioned, there are a lot of uncertainties moving forward. Yes, many are looking towards the lifting of the
Mm-hmm.
stringent quarantine measures in selected areas in Luzon. But the question now is, well, what happens after that? Investors are still looking towards how the pandemic situation in the country is going to be managed. I think that's where they are taking their main cues from to invest in the market.
Japhet, can you explain the market reaction to the GDP print? It was much, much worse than what analysts had expected, but actually in that day, it seemed to have been brushed off. Some analysts have said that they're already pricing it in. What is your outlook now? Do you, because the central bank governor has recently said that that is, going to be a one-off. The worst is already over. It's going to be a very sharp recovery after that. Is that what you feel as well? Are you revising your GDP, not necessarily targets, but outlook? And do you feel that there's going to be a longer, something way worse than the Asian financial crisis that might be happening in terms of recovery? Or are you on the camp of the government that says that this is already done?
Okay, well, first with the reaction of the investors, the GDP print, yes, it was worse than expected, but it didn't have much of an impact on the market on the day it was released, and this is because it has already been priced in. I think this has already been included in what investors are pricing in during the precipitous slide in the middle of March 2020. So now investors are looking towards what's going to happen with our economy for the rest of the year. On our side, in our mid-year media briefing, we gave a forecast for GDP for 2020. It's going to be a contraction of 5.8% for the whole year. Unfortunately, that was under the condition that second quarter GDP would slump only by 14% year on year. It turns out that the contraction that came out it's worse than expected. So we will have to revise our projection. At the same time, you had the MECQ, which was implemented in the third quarter of 2020 in selected areas in Luzon, including the National Capital Region, which contributes 36% to the overall economy. So we still have a lot of revisions to do. But one thing is for sure, it's going to be deeper than our previous one, which is 5.8%, unless there's going to be
Okay.
changes, positive changes towards the end of the year. Now, with respect to the recovery story, we're seeing a gradual recovery for the economy. It's not going to be a quick one because the damage has already been done. Because of the stringent lockdowns that have been implemented, we have lost a lot of jobs, and those
Mm-hmm.
jobs that we've lost, it's something that we won't be able to get overnight. Even let's say a vaccine is already there, it's businesses will still have to build their base, their respective investment base. It's going to take a long period of time before we get to regain all of the
Mm-hmm.
jobs that we lost, which in turn is where the economy is hinged upon. So in our view, this is going to be a gradual recovery for the economy.
Okay, so it's actually worse than what the government has projected, and also there's a lot
Mm.
of downside risk still. Can we talk about consumption? Just taking a quick peek, or just digesting the second quarter earnings and what that
Mm.
means for consumption. So during the period that we were easing the restrictions, did you feel that the consumption ticked up? As expected, more than expected, less than expected, and also given that the loan growth, it's a bit mixed. So a report today is that the MSE's got more money, but at the same time, the M3 liquidity is not necessarily that much, diba? Despite the fact that there's so
Mm.
much easing. So what is the consumption story here? Is that really going to be as good as we're hoping will be recovering, especially as the lockdown is now going to be eased, if it does?
With respect to consumption, it's similar with the general economy. It's going to be a gradual recovery for consumption. Yes, we're seeing improvements right now, but it's mostly because of the way we see it. Consumption is still going to be mostly on essentials. That's what consumers are going to. Of course, that's what consumers are going to buy first in this time of the pandemic. At the same time, again, we look at our unemployment figures. Looking at our unemployment figures, it's still high, and we still have a lot of job losses. A lot of job losses is commensurate to a lot of disposable incomes lost. So, given these challenging times with respect to consumption, it's still going to be focused on the essentials. We may only see a rise in the consumption of non-essential goods, once we are able to regain our previous employment figures.
Okay, let's talk about some specific stocks here. Let's kick off with the GMA buying back their deposit receipts from the foreign holders. What does this move tell you about the fear or the risk of regulatory risks, especially given that the ABS-CBN was recently shut down. This stock has been soaring because of that shutdown. But is there actually a risk that investors might be feeling that it might have the same fate as ABS-CBN?
Well, to be honest, the PDR is a blurry topic. But GMA's move yesterday, I believe this is because of a change in perception with respect to the Philippine depository receipts. Because first, what we thought of was PDRs were instruments that gives one the right. It gives the holder the right to claim for ownership. It gives the right, but it's not a representative of ownership itself. So that was our initial view of what PDRs were. That I believe that's also the reason why GMA and ABS-CBN used it to raise capital with foreign investors. But then, as mentioned, the hearing with the ABS-CBN's franchise renewal happened, and based on the findings and the recommendations of the technical working group, which was adopted by the House Committee on Legislative Franchises, that PDRs raise issue on ownership, foreign
Mm-hmm.
ownership, with respect to companies which should be 100% owned by Filipinos. So GMA's move yesterday, I believe, again, I believe this is based on the changing perception with the PDR. And yes, as mentioned, I believe this is a move which they're trying to do, a preemptive measure, which they're trying to do in order to avoid the regulatory risks, specifically the risk that could come out, the issues that could come out now that the committee is pushing for investigations with respect to the said Philippine depository receipts.
Do you think that there's a fundamental reason for the rally of GMA? Was that all sentiment driven, or are you actually fundamentally banking on this stock? Is there still some upside to go?
With respect to GMA, of course, given that ABS-CBN is now its main competitor, which is ABS-CBN, is heavily damaged because of the because of the non-renewal of its franchise. This is something that GMA can bank on. This is something that GMA can capitalize on. And if it could harness the opportunities that could come out of the current situation, then yes, its rally is something that is backed by the fundament that I mean its rally can be justified by the fundamentals, the possible improvement in its fundamentals as it banks on the current situation wherein its main competitor has been heavily damaged by the franchise non-renewal of the franchise.
Okay, so it's not just excitement. There's actually an
Yep,
opportunity for them to
there's an
capture
opportunity.
a market. There's an opportunity. Let's close with telcos before we end with broad markets here. Again, a lot of excitement because of the faster process of the LGUs to now do the permits for the towers. This was something that President Duterte called.
Yep.
Which one would this benefit? Why was it that the third telco player, Dito Telecom, was the one that had surged amid this new news? And not necessarily the incumbents. Is there any reason for that?
Well, it's because I believe that for Dito Telecommunity, their investors are expecting a lot, given that this one is going to shake up the competition. It's going to shake up the competition in the telecommunication space. Plus, as mentioned, you have the ongoing narratives for the said sector. You have the common tower policy. You have the government being directed to help the telecommunication firms in ramping up their network expansion through the towers. At the same time, there are a lot of opportunities given that the economy is moving towards the digital space. You have education is about to start, and people are and it's moving towards online learning. You have a lot of businesses doing their digital transformation. So a lot of opportunities right now for the telecommunication sector, and as for Dito, given that it's just going to be a new entrant in the market, so there's a lot of excitement with it, and this is what investors are pricing in, and this explains its rally yesterday.
But do you think they're actually going to be capable, given the MECQ, given the difficulties in rolling out networks right now with the situation, are they able to meet their commitments?
That if that's a problem that we see. Well, according to Dito, they'll be able to meet their commitments. But judging from what we're seeing right now, yes, with the quarantine measures that have been imposed, there will be hardships with respect to the rollout of the network.
And finally, just before we close on the index, have you seen it to be resilient? Actually, we haven't gone below 5,800. What's your outlook for this week, short term?
Okay. Well, for the index, yes, somehow it has shown resilience. The actually our trading range for the PSEi right now is from it has a support at 5,700 and a resistance range of 6,000 to 6,100. And so far, the 5,700 support level was able to hold. So this shows the strength of the market. That some way somehow there's still some optimism left. Now, another good thing with the market is it was able to breach, just yesterday, it was able to breach its 10-day exponential moving average.
Hmm.
So that's what we're looking into right now. If it will be able to sustain its ground above that dynamic resistance line. If it would be able to do so, then it would have a better chance of striking the 6,000 to 6,100 resistance range. However, if it does not hold, if the ground above 10-day exponential moving average does not hold, then there's a possibility that this could go back to and test its 5,700 support.
Okay, so we have around 24 points to go before we go back to those 6,000 levels. Thank you so much for those insights. That was Japhet Tantiangco of Philstocks.
Very much welcome, I'm Dan.
And that's a first look into the business day. Today is August 12, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.